Good morning, traders. Welcome to today's Outlier Live, where we cover the biggest headlines of the day and what the AI trading data has to say about it. Our first top story of the day is student loan borrowers are literally putting their financial future on the line in an attempt to get their student loans paid off. I don't think that this is going to end so well. Our second story of the day is the American dream is dead. If you don't already own a home, you may not be ever able to own a home in the future. And our third story of the day, this, in my opinion, is the leading indicator to tell just how good the economy is doing. And it's looking really, really bad. Tune in for that and more on today's Outlier Live. Some student loan borrowers are refusing to pay their student loans out of protest. So basically, these people who have their student loans are saying, nah, I'm not going to do it. I'm going to stop paying my student loans, and it's going to force you to have to pay them off. I'm sorry. I'm failing to follow the logic here. And on top of all this, the fact that they are going to just completely ruin their credit and have a credit score of like 12 because they are protesting paying off their student loans. So we're smarter than the government. We definitely know what we're doing because we took out $200,000 to get a teaching degree, and then we're not actually teachers. We're actually working at Starbucks right now. But that's beyond the point. The point is they need to pay off my student loans. Borrowers are boycotting repayment in order to pressure the government to cancel their debts. This has actually got my brain kind of broken. I don't think you understand. It's not going to help. It's not going to do anything. The only person who's going to suffer from this is you, the borrower, who has decided to ruin your financial future by failing to pay the obligation that you signed up for. I look at this story and I'm just in complete shock as to how these people think that this is going to work. But then again, right, my wife, she got a letter whenever the whole student loan forgiveness was announced, and it was a letter that says, yes, you are qualified to get 100% of your student loans paid off, thanks to Joe Biden. Thanks to good old Uncle Joe Biden, Grandpa Joe Biden. And I don't think that's happened yet. In fact, I know for a fact that hasn't happened yet, because when the student loans repayment started, we've started paying back on it again. Now, we can afford it, so I'm not really worried about it. And we have the money to pay it off. But I tell her, I don't want to pay this off. Because the politicians, they used this as a card to get your vote 4 years ago. They played everybody who voted for the Democrats. They said, listen, vote for us. We're going to cancel student loans. We're in 2024. We're ready for the next election cycle. Where the hell is that payoff? I don't know. But I know one thing. I'm not going to have her pay off her student loans because we could do it in full in a second. Because they're going to play this card again. Maybe they'll come through. Maybe there's enough people who actually remember these lies that they told, and they're going to call them out on their BS. And now the only way that they're going to get those votes again is like, oh, crap. We promised it before, we didn't deliver. So I guess the only way we're going to get those votes is if we actually deliver. So it would not surprise me at all if they did forgive some student loans. And they've tried this here and there. They've forgiven some here and some for other people. And we're going to talk about another thing that they're trying to pass right now. But you can't make these promises over and over and then expect people, when you don't deliver, when they're stressed financially beyond reproach, and now you're requiring to pay you're requiring them to pay their student loan payments back at a time where they just have no money left over because of inflation. What do you expect these people to do? One thing I did not expect is for them to refuse to pay out a protest. So I see both sides of the story here, right? Millions of borrowers with existing student loans still have not made a repayment since the bills resumed in October after a 3-year hiatus, and some admit they're going to refuse to pay out of protest. And if you're just tuning in real quick, my name is Christopher Yule. We cover the biggest headlines of the day and what the AI trading data has to say about it. And if you're interested in that too, be sure to definitely hit the subscribe button down below and start trading with the world's best AI stock trading assistant. Head to OVTLYR.com right now to see why outliers win. So this continues on. It says 25% said they have not made any payments at all. 9% said they are holding off on paying bills intentionally in an effort to pressure the government into canceling their debts. In my opinion, and this is just my opinion, by not paying your debt, it will not make a difference to the government, right? That $200 to $500 a month or whatever you gotta pay back, the government doesn't care. They're just going to print more money. The government literally does not care about what you're thinking, because you are the smallest of atom drops in the ocean of what they actually can do financially. So you're not going to pressure the government to do anything. Nearly 1 of 10 delinquent borrowers said in this boycott, 44 said, or 1 in 10 delinquent borrowers are taking part of the boycott. 44% believe their protests will lead to cancellation of some student loan debt. No. This is how you can actually do it here. Go on the TikToks, go on the internets, go everywhere and spread this message far and wide. I'm not voting for anybody unless the student debt is canceled. Don't promise it. Deliver it. Deliver it this year before the elections happen in November. Then you actually might do something. Because if you can sway them, they don't care about your dollars. I'm being very honest here. Your dollars are meaningless in the grand scheme of things. What they care about is your vote. They want to stay in power. They want their offices. If you want to actually embark change here, don't ruin your financial future. Show them. Spread the word. Say, we're not doing anything. We're not voting for anybody in your category, in your party whatsoever, until the student loans are canceled first. Deliver on your promises, and then maybe we'll consider voting for you. But don't do it with your dollars here, people. But even if no further debt cancellation comes to the boycott, most of the protesting borrowers believe their efforts will make an impact. They will if you actually boycott on votes. It goes on to say 86%. Hang on. It says 45% are somewhat likely. Hang on. I am having a hard time reading this. 86% told intelligence.com. It's very, okay, so 45% or 41%. That makes up 86%, Chris. Very or somewhat likely that the boycott will draw attention to the student loan debt conversation. 64% they believe it's highly or somewhat likely that the boycott will help elect political candidates who believe in loan forgiveness. I'm telling you right now, speak to power, spread the word. If this is your message that you want to fight on, tell them they're not getting your vote unless they cancel, you're not getting their vote unless they cancel student loans before November. Then, and only then, will they actually listen to you. So let's take a look at what the AI trading data has to say about JP Morgan, one of the largest financial institutions in the world. And we actually got a sell signal back on December 8th. And if you've been following these signals here, you actually would have seen a 70.9% return, which is outstanding. So if you want to get your hands on these outstanding signals and get an incredible deal, which is a very, very limited time deal, head to OVTLYRdeal.com. That's outlierdeal.com to start trading with the world's best AI stock trading assistant today. Now let's go take a look at what the internet is saying about this, right? So, like I say, they're trying, right? Biden's announced a plan to erase student debts. Biden has announced a plan to erase students for loan debts. I don't think they wrote that correctly. They're going to erase students. They're going to erase student loan debts under $12,000. This person says, totally not an election year ploy again, right? Totally not. The ones under $12,000 have nothing to worry about. I actually think this person's right, because there are a lot of people with like $120,000, $240,000 of debt. They're the ones that really need to be worried about. Not enough. He promised us full relief, and now he wants to give us $12,000. We need 100% forgiveness. Erase equals transfer of debt to the taxpayers. And this person says, I bust my backside to pay off $52,000 of debt in 5 years. Biden wants to swoop in and take credit. F this guy. So there's really two sides of the story here. But at the end of the day, all they care about are your votes. Don't risk your financial life here. Don't risk your financial future. Do vote with your votes. Show them your vote counts. Show them you're not going to do this again. You're not going to listen to their lies. You're not going to listen to their propaganda. Only when they actually deliver will you actually give them a vote. If you don't already own a home in 2024, you may not ever financially be able to own a home. I mean, it is absolutely ridiculous out there. My home, thank goodness, has doubled in value since the time I bought it. And the financing for that has tripled since I bought it. And that leads to a monthly payment that would be 4 times higher than what I'm paying today. I'm telling you right now, I couldn't live in this house. I could not live in this beautiful home that I live in today if I were to buy it today. Now think about that. That means we're excluding more and more and more people who want to get into homeownership, but they can't literally make the payment. They want to own a home. But because things have changed so much, because interest rates have gone up so much, inflation's gone up so much, their own bills beyond just their housing expenses have gone up so much that you're excluding more and more and more people out of the buyer pool. Let's just use round numbers, for example, right? Let's say 8 years ago when I bought my house, that there were 1,000 people looking at it who could actually afford it, right? Now, of that 1,000 people who could actually afford it at that time, there may only be 20 that could afford it today. So you're excluding all these buyers. And then you've got homeowners like myself who don't want to sell because I don't want to have to go get a new mortgage that I can't afford and at a rate that is 3 times higher. And I'm stuck in this house because nobody's going to be able to buy it. And even if someone did buy it, now I have to go and buy another home. And that other home is going to cost a heck of a lot more than the one that I'm in right now when I bought it. We have a cycle keeping people out of the middle class, is what this realtor says here. And before we get too much further, my name is Christopher Yule. We cover the biggest headlines of the day and what the AI trading data has to say about it. And if you're interested in that too, be sure to definitely hit the subscribe button down below. Start trading with the world's best AI stock trading assistant. Head to OVTLYR.com to start to see why outliers win. Let's continue on here. Americans now need to make $120,000 to afford a typical middle-class life and qualify to purchase a home, one expert discusses. When I saw that, I was like, whoa, 120 grand just to afford a typical middle-class home? Wonder what the average salary is. The average annual salary in the US is $59,000. The average annual salary is half what it would take to afford a typical middle-class life and qualify to purchase a home. I could not believe that. Something's broken in this system here, right? And going back to the headline, right? We have a cycle keeping people out of the middle class. Yeah. I think most of us in America would define the middle class as somebody who can work a 40-hour week and have the income to purchase an average home in America. Right. Smith explains how just a few years ago, 60 to 70K would have been sufficient to qualify a home, which was average annual salary. With the average cost of a house being $400,000 to $420,000 in 2024, people's salaries would have to be $120K a year just to even qualify. Rent prices are up 30 to 40%, make it harder for them to save for a house. So it's a perpetual cycle. It's keeping people out of the middle class, right? People need to save 20% to get to a lot of these mortgages. 20% of $400,000 is 80 grand. Saving 80 grand is not a trivial feat. Saving $80,000 when your average annual salary is $59,000, that is a huge monumental task here. And if rent has gone up 30 to 40%, like where are you even going to save it from? And let's also take into account other factors, right? Your insurance. I know your insurance, just like mine, went up this year. Your taxes probably went up this year. Everything that you buy went up this year with inflation. And even though they want to say, oh, it's only up 3.7%, oh, it's only up 2.8%, whatever the case is, that's compounding. That's 2.8% more than it was a year ago when it was up 10%. When it was more than it was a year ago, which was up 3%, whatever the case is. Inflation's cooling, but overall, everything is hella more expensive. You know that. So how are these people expected to even save for a home? How could they even plan to save $80,000 to get into an average home? Now, on the flip side of that, does that mean that we've got a real estate crash on the horizon? Because if I can't sell my home because I can't buy a new home, what would it take for me to get out of this? Well, of course, I want to sell mine for as much as I can and buy the next one for as little as I can. I don't want to change in lifestyle. I want a nice, beautiful home like this. So the rates have to come down, which we have no control over. That's controlled by the Fed and then all the banks that price off the Fed interest rates. So you've got so many different variables that are all working together to really shoot some people in the foot. Most people are carrying student loan debt, which is at an all-time high. The average payment in the country is $500 a month just for the college degree. And some people are saying $500, I wish. It's more like $1,200. Credit card debt's also at a record high in America. And some people would tell you that that is a good thing. Some politicians that would tell you that credit card debt at record high means that people are so excited to go spend. But we know that's not the case. Credit card debt at record high is because people are having to use their cards for groceries, right? They're having to use their credit cards just to pay for their daily living. They're having to pay $1,200 to $1,500 a month in childcare. I remember it was a very brief stretch where both of my kids were in childcare, and it was $1,200 each per month. So $2,400 a month going to childcare. And I'm sure it can get a lot more than that. This person says even $3,000 or $4,000 is possible. So if you've got somebody who's renting for $2,500 a month, $1,000 for two college loans, just $2,000 a month for daycare, and just like that, you need $100,000 to pay for that. $2,500. Now let's not even take into account that the car payment you've got is probably $1,000 these days, right? So we've got $2,500 for rent plus $2,000 for daycare plus another $2,000, so $1,000 for each of two college loans. That's $6,500 a month. That's $78,000. That's your after-tax take-home. That's approximately your after-tax take-home if you have a $100,000 a year job. Or if you have two $50,000 a year jobs. That's approximately your take-home right there. How can anybody get... I absolutely see the math behind this cycle that is keeping people renting and keeping people out of the American dream. Owning a home, if you don't already own one, may just have evaporated, which is a sad thought. But let's take a look at Zillow. Maybe you are in the market to buy a home, and you can look at Zillow. Zillow, we actually got a sell signal a couple days right after the top here on December 28th. And if you've been following these signal returns, you've seen a 21.54% return just on Zillow. Now imagine that with everything else that you could buy whenever you start trading with the world's best AI stock trading assistant. So if you want to learn more, head to OVTLYRdeal.com. That's outlierdeal.com to start trading with AI today and get an incredible once-in-a-lifetime deal. So let's go see what the internet's saying about this, right? The U.S. housing affordability is worse today than the peak of the last housing bubble. The median American household will need to spend 45% of their income to afford a median priced home, right? We're not looking at luxury homes here. Median price, that's the middle. Homeownership is higher than the 1950s, right? Well, that's good, but that doesn't mean the housing affordability is any better. Affordability is better than it was from 1979, 1990, maybe so, but looking at this chart here, in recent memory, we haven't seen anything close to this. January 2006, middle of 2006 was the last time that we saw anything this unaffordable. And I don't know where this is going to go, but it is definitely not looking good for those who don't already own a home out there. Credit card delinquencies are surging. Americans are battling high inflation and high interest rates. And this, in my opinion, is the number one leading indicator that you need to keep your eyes on as the economy is getting worse and worse. Credit card debt is hitting all-time highs. We're over $1 trillion in credit card debt at this point. And some politicians would tell you that just means the American consumer is so happy they want to go out and spend their money, right? They don't mind racking up a little credit card debt because they know they can afford it. But we know the truth. People are having to use that credit card to buy groceries. People are having to use that credit card to pay for childcare. People are having to use that credit card to just pay for the basic necessities that have feels like doubled in price over the last couple of years. And the problem with trying to gaslight Americans into thinking that we are only using this selfishly because things are just so great. The problem is that we remember what everything costs. 2019. We will remember what everything cost during the Trump era. We remember all of that. And then you're trying to tell us, oh, inflation's cooling. Things are getting easier. Stop complaining. Prices are going back down. They're not. Inflation is still over zero. Let's just do a little picture time with Chris here, right? Let's say inflation is at this level here. Let's say inflation's at 2% or so. And then it's spiked up to 9%, okay? And then it's going up another 3%, and then another 2%, and then another 3%, and then another 2%. At what point did prices ever come back down? I don't see that point. In fact, what I see is prices going up, but maybe not up as fast. That's what we're dealing with today. And because of that, people are their income is not keeping up with inflation. A growing number of Americans are falling behind on their credit card payments as they continue to battle high inflation and interest rates. All stages of credit delinquency are 30, 60, and 90 days past due are rising in the third quarter, surpassing pre-pandemic levels for the first time. Delinquency rates are now approaching the highest level since 2012. 2.21% of credit card balances were 60 days late during the 3-month period, up from 193. Now, when you get into granular numbers like that, just keep in mind, for every $100 that a bank is loaning out on credit cards, $2 are delinquent. 3.19% are 30 days late. And 1.52 are 90 days late. So if I'm an institution and I'm loaning it out, and I'm loaning out $100, and I can only reasonably expect to collect 97 to 98%, you know what I'm going to do? I'm going to raise the rate on everybody. I'm going to say, because of these people who are not paying back their balances, I'm just going to raise the rates across the board. I'm going to make everybody else pay more on their interest rate to make up for the fact that I'm losing 2 to 3%. Sorry, deal with it. What are you going to do? Not use your credit card? We've got you in a system where you can't stop using your credit card. Just try to stop using your credit card and see what happens. That's what these people are telling you, right? The spike in delinquencies, banks are giving fewer credit line increases and reducing credit lines more frequently. And not only in credit cards, but I've seen all these different auto lenders. They're getting right out of the auto lending business. And the auto rates are going astronomically higher because they're looking at everybody who's about to start defaulting on those loans that they took out in 2020, 21, 22, 23, where they were paying over sticker price, paying the dealer premiums, and now they can't afford it. They can't afford their $1,200 a month car payment, in addition to the groceries that have doubled, in addition to the student loans that are coming back, in addition to the credit card payments. The rise in credit card usage and debt is particularly concerning because interest rates are astronomically high right now. The average credit card rate is at a new record of 20.72%. And the previous record was 19% all the way back in 1991. And hey, if you're just tuning in, my name is Christopher Yule. We cover the biggest headlines of the day and what the AI trading data has to say about it. And if you're interested in that too, be sure to definitely hit the subscribe button down below and start trading with the world's best AI stock trading assistant. Head to OVTLYR.com to see why outliers win. Although inflation has cooled considerably in recent months, it's still up 3%. It's still up 3.7% compared to the same time a year ago. And that is the part where it drives me absolutely up a wall. I get so frustrated when I see these news commentators and especially the left-wing outlets coming out and saying, inflation's over. We won. That was easy. There was no damage done to the economy and we have fixed everything. No, you haven't. My grocery bill has doubled since you've been in office here. And not only that, prices are not coming down. They may not be going up as fast, but they certainly sure as heck are not coming down. And that's why I've been saying for a long time, I think we need to see some real deflation. I think we need to see some real disinflation. Both of those are different terms, so they are real things. We've never experienced that in our lifetimes, and I hope we actually can. Now, the problem with disinflation, and deflation is that when this happens, it can spiral, right? Let's say, for example, I want to sell my home and I can't find buyers. So I drop the price. Let's just use round numbers. Let's say I have $1 million home and I need to drop it to 900,000 to just attract buyers. So I just de-inflated my house. I deflated my house. Nobody's buying because all the other market participants, everybody out there who wants to buy a house, they're looking at this saying, geez, if he just took $100,000 off, why would I wait? Why would I buy it now? I can just wait. I can sit on it. Where I, as a seller, I'm like, geez, I gotta get out of this house now. So I'm gonna drop another $200,000. So I just took a 30% deflation on my house. And you as the buyer, you're thinking, I think I'll wait a little bit longer. Let's see how much pain he can take before he really gives in. And that is the downward cycle. And that will happen to everything from homes to autos, to your groceries, and then to your job. So while I do want to see some deflation, I don't want to see it spiral out of control. The inflation spike has created severe financial pressures for most U.S. households, which are forced to pay more for everyday necessities like food and rent. The burden is disproportionately borne by low-income Americans whose already stretched paychecks are heavily affected by price fluctuations. Yeah, dude, if you couldn't afford things before, this inflation is absolutely killing you. And then everything's going up in price like rent, insurance, groceries, gas, you name it. And it's only hurting the people who can afford it the least already. So speaking of what's in your wallet, let's go take a look at Capital One, right? Taking a look at Capital One, we got a sell signal back on November 22nd. If you'd been following these signal returns, you'd have seen a 40.77% return, which is pretty outstanding. So if you want to get your hands on these outstanding signals, head to OVTLYRdeal.com to get probably the greatest deal of our entire life and start trading with the world's best AI stock trading assistant. All right, let's take a look at this. So this is what the internet's saying, right? Despite the Fed's signal to pivot, interest rates on new car loans are still rising. The average rate on a 48-month new car is 8.5% for the first time since 2001. 8.5%. Jeez Louise, that's high. The same can be seen with credit card debt interest rates, which just hit a new all-time high. So why do autos, credit cards, and buy now, pay later financing all continue to charge higher rates? It's a combination of default risk and providers for those financing options knowing consumers are desperate. Debt is fueling consumer spending. Yeah, so this is the interest rate. Now, it has, of course, gone down over many, many years, but it's spiking back up. We're looking, the last time it's been this high was 2001-ish, and then it got as high as, 17% back in the 80s, which I definitely don't want to see that. But that's what I'm talking about here, right? If delinquencies are rising, the only way for these banks, institutions to make up for it, they're going to jack up their rates even higher, which is going to cost more people to max out those credit cards, and then more delinquencies are going to happen. This is not looking good at all. This can go on a lot longer than everyone thinks, which, oof, yikes. Consumers that are no longer being employed, getting wage increases, or reducing their spending are becoming overextended. They'll take on debt to continue living a lifestyle they got used to living in the good times that they can't afford anymore. Absolutely. The debt cycle will lead to a collapse. At some point, they can't continue to get credit extended to them, and they're going to default on something. Yeah, absolutely. There's so much going on in the economy out there that it's frustrating when the politicians want to tell you that everything is great. We know it's not great. We're living this every single day. And I don't know of really very many people at all who are saying that their life is better in 2024 than it was just a few years ago. Because we can all remember a time where we were more prosperous. Now, I don't know how to fix that. And hopefully people smarter than me can fix that in the near future. I mean, in the very near future would be great. But I also know that the YouTube algorithm is incredibly smart and it thinks that you're going to love one of these two videos. So click one of these to watch more, and I'll see you on the next episode.